Hello and welcome to Every Quarter. This is episode number 38 and the date is 18th of July 2024. In this episode, I briefly talk about stock investing. So this video is an introduction to stock investing. In it, we go over a few things that I would want you to know concerning stock investing. This video is specifically meant for beginners, those that are new to the concept of stock investing. And my hope is that as we move forward in the next coming weeks, we will be able to tackle everything that we need to know about stock investing, from the very basic fundamentals to the very detailed explanations on the topic of stock investing. So, what is stock investing? This is when you buy shares of ownership in a public company. Okay, these shares are often referred to as stocks or equities. That's what stock investing is. So we said that when you buy shares of ownership in a public company. What is a public company? So public companies are those companies that have sold a portion of themselves to the public via an initial public offer. What this means is that shareholders have a claim to part of the company's assets and profits. So when you buy a stock or a share in the company, you become a part owner of that company. Okay, so why do companies share part of themselves to the public? So this is one of the ways that companies raise funds for growth. Okay, so companies often sell shares to raise money to grow their own businesses. So the stocks are sold at a price which is called a stock price. So the price of a stock can fluctuate based on the various factors like company performance, industry trends, and overall market conditions. What do you expect as an investor in a company to get? Obviously, you are investing in a company, you are buying stock to get a return or to get returns. So there are two major ways in which you make money when you invest in a stock. When you buy a portion of a company, a public company, through stock investing. The first one is capital appreciation. So if the stock price increases, you can sell your shares at a profit, or at least the value of your shares in the company will increase. So let's assume that today you buy 10 shares in a company and each share is 2 kwacha, and after a few months, after a few days, after some years, the price of that stock, because maybe the company has grown in value, you find that the price of that stock grows from 2 kwacha to 5 kwacha. It means your stake in that company has grown by that ratio. So you make money in investing in stock through capital appreciation when the value of your stock increases. That is when the stock price rises. The other way in which you make money in a company when you have invested in stocks is through dividends. Okay, so sometimes some companies will distribute a portion of their profits to stakeholders as dividends. Some companies do this, say like maybe twice in a year. Typically, companies will distribute their profits once in a year. So that's how you make money from your investment in stocks. One, through capital appreciation, when the value of your stock increases as the stock price increases. Also through dividends that are declared. Okay, I hope that was clear to you. This was just meant to be an introduction to stock investing. Until next time, when I bring another topic with regard to stock investing, it's bye from me.